Welcome to another episode of the Know Better, Do Better series. I am here with my girl, Chloe. And at the top of every show, we start with our series of trends, taxes, and tea, where we're giving you the latest trends on how to save more, pay less, and share some current event that has to do with money. Chloe, what's our trends, taxes, and or tea today?
Yes, so we have something that was a result of a couple of articles that I've been reading over the last few months about this federal ban on evictions and how it's really affecting landlords. Today we're talking about real estate investing, so I thought this is a good topic to bring up. But basically, as you all know, there was some COVID relief for renters, and there's an eviction moratorium that just allowed, or that basically said that landlords can't kick people out of their apartments or their houses if they stop paying rent. So that was something that was, kind of a big shock for a lot of landlords, especially the smaller ones. There's a lot of larger companies that, have big portfolios of properties all over the place. They have cash reserves. They have the wherewithal to be able to take a hit like that. But, smaller landlords that are just have one or two rental properties, or kind of, individuals who want to get into rental real estate, it really hurt them. So that was something that I saw an article, and we'll share that in the show notes, just about some personal stories from people who were affected.
Yeah, speaking of personal stories, I fit into the personal story. I do have a rental property. And what's kind of ringing true as I listen to you talk is this idea that there are two sides to every story. Much of what I've heard during the pandemic and the narrative around discussions that I've been a part of is, woe is the people who can't pay their rent right now and are, could be in a situation where they're being evicted. This is much needed relief. And there are definitely people who are in need of this relief. That is why it exists. But as I was saying, there's two sides to every story. And I think that when we think of situations like this, we only think of the person who needs housing. We don't think of the person on the other end of it. So as a business owner, I bump into people all the time that are interested in, what they call passive income or starting to do real estate investing, want to get a second property and be a landlord. And those are single individuals or, single families that are wanting to buy one property, rent it out to someone and, use that as part of their investment portfolio. And imagine being in a financial situation where you can barely afford that. You're doing it to invest in your future. And then you have someone on your property that, has now for not over a year, maybe paid any rent and your mortgage is still due. So I just always remind people to be mindful of the idea that on either side, there are people that either are taking advantage of the system and there are also people that are suffering. So to kind of keep your perspective open. So for me personally, I have an Airbnb and I had to shut the Airbnb down during the beginning of COVID because I needed somewhere to live. So my husband is a physician and, there was a lot of things that we didn't know when this all started. He had to go to work. He was one of those essential employees. I came back actually from out of the country as COVID began. So I was coming from India and Indonesia at the time, and I ended up being quarantined in the house. So there was no way to get income from this property because I actually had to live in it. And so many people had to kind of relocate or take up a second residence during that time period. And their rental income was gone because of it. So just be mindful of, like I said, what's on this side versus what's on that side. And then how many other sides are there? Because there's probably more than two sides to every story if we really think about it, because everybody's situation is so unique.
Definitely. So just to recap, this is a part of an investment series, a 3-part series. And so in part 1, we covered how to get started with investing, types of investments, and how investing fits into your financial plan. And so then in part 2, the last episode, we covered types of investment accounts and then how to prioritize between saving, investing, and paying off debt. And so today we're going to talk about the trendy topic of real estate investing in part 3 as we wrap up this series. So I'm really excited to get into this topic.
This is yet another hot topic. I think we did a really good job of picking all the topics, but this one in particular, I know so many people that are so interested in real estate investing and need to get more information so they can know better and do better. Let's go.
Yeah, and so we picked this topic because we all watch HGTV. We see everybody flipping houses. We see the property brothers and everybody fixing up houses, and so social. And then we look on social media and everybody's talking about rental properties and passive income and just all the buzzwords. And so between television and social media, it makes these like home renovation, kind of flips. And also just the idea of owning a rental property seem like it's super easy. It's always going to be profitable. You make, hundreds of thousands of dollars or millions of dollars. And, it's not the case. It's not as easy as it seems. And it's not passive at all. And so there's a lot of cost. There's a lot of commitment involved. And it can be not only a financial drain, but an emotional drain.
Amen. Hallelujah. Especially to the not passive part. And I think one of the draws and one of the things as I listen to people talk about it, I'm like, well, tell me more about that. Why is that interesting to you? And it's like, well, if I just get, a place, I only got to come up with a little bit of money for a down payment. Someone else is going to pay my mortgage. And I'm going to get income off of that. It's going to be so great. I'm going to build equity in the place. And it's just going to be a really good investment. And all of those things can be true, but there is a lot more to take into consideration. Everything falls apart and you've got to come in and, repair something. There's, vacancies and you've got to cover that mortgage yourself. And so here it is with the not passive. I think sometimes people don't realize that, regular old investing, putting it into a brokerage account, a retirement account, 401k, your 403b, these are things that people are abandoning because they don't understand them. They don't understand how the market works, but they understand like, oh, I can apply, I can get approved. I've seen other people apply and get approved, and then I'm going to go get a renter. They understand the actions related to real estate investing, where they don't understand the actions related to, traditional investing in the market. And so they don't realize that investing in the market can, in fact, be passive. If you, in fact, save enough, your portfolio can be large enough that you are gaining income from your portfolio without putting anything else in there. If you've, gotten a certain amount, that whatever it is you need for this passive income, it will pay it. But we first have to have good savings strategies in place to get the money in the portfolio. And the real estate is not really different. You got to put some money into that real estate in order to get something back out. But it also comes with a lot more expenses, a lot more, investment of time, investment of knowledge, and investment of managing people. And yeah, I know I'm still in the show. So let's get started with with why this is important.
Yeah. And just to piggyback off what you said, owning real estate is like running a business. It really is. And I think the appeal sometimes, with the market, it's like, what is this stuff that's out there? But when you own real estate, like you can touch it, you can feel it, you can see it. And so I think that's part of the appeal, but it really is like running a business. And so we're going to talk about some of the commitments and things that you need to consider before you dive right into it. So the first thing is really just start with why. When people come to me and say, I want to own investment properties or I want, rental real estate, I ask them, why do you want this or why are you doing this? But, wanting to invest in it just because it sounds like an easy way to make money or, it's a way to have a vacation home that you can occasionally rent out. That's not a good enough reason, to be honest. You really need to understand, how does this fit in with your financial goals? Does this make sense for you? Are you ready for the commitment? And just go beyond the idea of, oh, I can make passive income.
And are you willing to invest the time?
Yeah.
Mm-hmm.
Yeah. So there's kind of two components when you think about the commitment involved. The first one is money and the second is time. So I want to dive into those a little bit. For money, just is your financial house in order? I know, Lauren, you and I have talked to people and they want to buy rental properties and don't have an emergency fund. They have credit card debt. They have, just all the things that we talked about in the previous episodes. Do you have that solid foundation before you can start investing? If you don't have an emergency fund, if you have credit card debt, you probably don't have a down payment. So that's, something to think about. The
But
more.
what about this first time home buyers program? What about this nonprofit organization I heard about, Chloe? Like, they're going to prove me. There's options out there. I can get it, right?
Yeah, but you end up putting yourself sometimes in a worse financial position when you do that. And when you think about just an investment, rental real estate, rental property, it's an investment. And it's like a business, and you want your business to be profitable. The more debt that you're paying on it, that takes away from your profits. So
the more risk that you take on as well. Like, if you come in a situation that said just because you can get approved does not mean that you should take on an additional burden because you have additional risk. So if you buy a home and you have credit card debt, now you've got this mortgage, property taxes, and insurance to take care of, in addition to trying to pay down the credit card debt. If you got student loans and you should be working on paying those down. Now you've got this thing plus that thing. So just because you can does not mean that you in fact should have. Like I said, there's no emergency fund and you get your new place. And so it's a little bit harder to get people in it than you thought it was going to be. Now you're paying rent and mortgage, or, paying for where you live versus also your rental property. That's going to be a drain. That money is going to have to come from somewhere. And if you don't have an emergency fund, you're going to find yourself maybe picking that up with credit cards in the short term to be able to cover everything. So.
Yeah. And then also, I don't think people, it's similar to buying just a primary residence. I don't think people understand just the costs that are associated with it. There's an upfront cost and there's ongoing costs. And so, have you calculated those things? Do you know what those amounts are? Do you have the cash to cover the upfront expenses? Do you have the savings to cover the ongoing costs? Has that been factored into the amount of rent that you're going to receive versus, the mortgage that you're paying? Because it's not just rent minus mortgage. Like there's money that you need to have set aside for reserves. Things are going to break. You're going to, just like a regular house, you will need a new roof. You will need, other things to be maintained, other things to be replaced over time. So, those are all things to think about on the money side.
Yeah. We've done, like you said, a few episodes on this. And if you've been listening to the podcast for a while, you might have heard it. But I owned a property that I had renters in, full-time, long-term renters. And I did need a roof when it came time for them to leave. And that was not a fun thing because I was not making enough money on that house to have collected enough cash to be able to afford the roof just based on the rental property. And then in addition to that, there was wear and tear. Long-term renters being in that place and not having cared for it in the way that I would have cared for it as a homeowner. Them paying their rent on time made me kind of like get a little lax. I wasn't going to check and make sure, doing annual checkups to make sure that the property was in good shape and seeing what they needed. Generally, if something bad happened, they reached out, but I had to do quite a bit and just like general repairs to get the house ready to be sold. So that was yet another cost that had to come out that, where was it coming from if I didn't have enough income coming in out of my own pocket?
Yeah. And renters generally, they don't, if they've never owned a home before, they don't take care of things the same way. And so, I mean, there could be things that might be a minor fix now, but, they don't pay attention to it. They don't think it's a big deal. And it turns into something that costs thousands or tens of thousands of dollars down the road. So, that's, something that you have to think about and deal with. And that's a good segue into the time aspect of it. How many hats do you really want to wear? There's so many hats that you have to wear when you have rental real estate, or even if you're flipping properties. You have a property manager. You have to deal with the tenants. You have to collect the rent. You have to do the inspections. And just that coordinating back and forth. You have bookkeeping. You have managing the cash flow, managing the taxes, understanding how much to set aside for reserves, understanding, how the bookkeeping works so that you can prepare your tax return properly. Are you preparing your own tax return, or are you paying somebody to help you with that? And so, those are just two of the roles, but there's so many more.
Okay, so we just have to pause for just a second because you just hit so many nuggets. So the first thing, a property manager. Yes, that is a cost, and that is the biggest thing that I see people want to skip around. Situation I just described above, I was an offender. I had a property manager to begin with, and I was like, man, they're nice, they're cool, they pay on time, it'll be fine. Let me save that. I think it was like 10% or something. Was like they were collecting, and I was just like, gosh, it's a lot of money. This is crazy. In hindsight, I wish I would have kept the property manager. So that is, like you said, if you want to do it and you want to save the money, then you also need to invest the time, and you cannot get lax there. Then you talked about like bookkeeping and cash flow. The number of people that have come to me, Chloe, that have had one bank account for their personal expenses, for their savings, for their rental property. Everything was going in one place. You cannot manage properly rental stuff in your own personal bank account. You know, is this my mortgage money? Is this my groceries money? Is this the rent coming in? Like, they're not all one and the same. And to think like, oh, like you said, I get the property, someone pays the rent, and I can spend the money as I please is not how it goes. So like you said, managing the books, managing the other expenses, keeping all of those things separate, super duper important and also time consuming. And then to, like I said, we've already kind of beat the dead horse with the repairs and the maintenance. Like, you can be a Mr. or Mrs. Fix It, but that's what you're going to be spending your weekends doing. You know, maybe mowing the lawn. You know, something's broken and you go there and you're up on the ladder trying to change the, you know, light bulbs because you got those high ceilings. Is that really worth it to you as you think about investing your time?
Yeah. And then, you know, just from the business side of things, and just locating the property, like where do you want to have these rental properties? I talk to people sometimes who are interested in buying a rental property in a totally different state that they know nothing about. You know, is that really a good idea? You know, how do you know the market there and the tenant laws, the landlord laws for that state? You know, the legal documents and clauses that are required in those legal documents, and just kind of determining, you know, if those investments are profitable. But, you know, you have to put on that hat in addition to all the other ones. And the more that you outsource, the more profit you're giving away.
It is so, so true. And as we think about, like I said, all of this, it's like, well, do the numbers work? So all these things we just mentioned are various aspects of organizing a business, making sure that it's going to be profitable. And before you put a dollar in, you should be running the numbers to make sure that this is actually a good investment. And so if you hate math, this is yet another thing. If you don't like spreadsheets, you know, now you need to enlist the help of someone, because like you said, yes, anybody can buy a house. We can walk in the bank today and see like, how can I get approved for something? And we can get out there and start looking. It is just that simple, but it's also not just that simple if you're going to do it right.
Yeah, and you can never assume that a rental property is just going to automatically be profitable. It's, you know, you have to run the numbers. And I mean, and I've seen the numbers from several clients, and it's rare that it is profitable, to be honest. And you can't just rely on the underlying appreciation of the house. Like if your cash flow doesn't work out well and it's not profitable from a cash flow perspective, you know, we've talked about this before when we talked about buying a personal residence. The growth of real estate over time, you know, pretty much keeps up with inflation, or barely keeps up with inflation, versus, you know, putting money in the stock market or putting money into the market. You could get returns that are easily 2 to 3 times as much. And so, you know, just for all of the work that you're putting in, do you really want to just have an investment that's barely keeping up with inflation, or that's not profitable because you haven't taken the time to run the numbers?
Amen. 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 I mean, also, what kind of property do you want? So I know something that has been getting more traction and becoming more popular is like multifamily homes. So duplexes, small apartment buildings, and things like that. People are getting away from wanting to do a single family home. Well, that's an added layer of complexity when you've got 4 units you need to fill up. You know, you've got 4 units that you need to maintain. So yes, there is a possibility that it could be more profitable than just a single family home. But also, what additional risks are you taking on? And then you got to think about too, like, do I want long-term renters or short-term renters? You know, I told a little bit of a story earlier about a long-term renter and the things that I bumped into with having a long-term renter, yes, the income was stable every month. The rent was on time. But I also wasn't clearing enough to make that house profitable overall. Like I said, when I took into consideration maintenance and things like that. And then I went short term. I currently have a place that I do Airbnb, but it's constantly turning over. So you're constantly, cleaning fees. Sometimes people are throwing a party at your place. Like you said, if there's only a weekend, they will stand on your couch and drink alcohol and, vomit in weird places. Like, I'm just keeping it real with y'all. Like, these are the things that no one wants to talk about as it pertains to. So short term, yes, you can charge more. Yes, you can make more, but you're constantly, like I said, there's also additional expenses that are related to that.
Yeah, and I've heard people too that want to buy a primary residence and rent out like a couple of rooms. And if you're a single woman, do you feel comfortable? Do you feel safe doing that? I had someone come to me and similar thing, like they wanted to buy a house and rent out rooms and bought more house than they could afford because they were factoring in the rent. And then COVID hit. So then do you want somebody that you don't know in your house, like when there's a pandemic going on? That kind of changes things. So yeah, it's just there's a lot of things to consider and things can go wrong.
Yeah, that is another good one that you brought up is house hacking. So another popular term, if you're interested in this topic that you may or may not have heard of, if not, give it a Google, but it is basically, like you said, you living in the place while other people are also living in the place. And, they're covering what would have been your part of a mortgage or rent or covering your whole mortgage while you have them in the house. So you don't have that expense and you can, save up more money or do other things with it. But there are, like you said, risk associated with that. And you move to the roommate situation. So.
Yeah, and you don't know who they're bringing into your house. Like, they're looking around at stuff that you own, so you just never know. So yeah, and like we said before, just make sure you understand all of the different costs, the upfront costs, the ongoing costs, cash reserves, how much the cost to borrow if you are going to borrow, how much interest are you paying over time, the tax implications. Talk to a CPA before you decide to jump into this and see, is this something that, how does this affect my taxes at the end of the day? Mm-hmm. But there's two components to rental properties and kind of understanding how the numbers work. And the first is the income or the cash flow. And so how much are you receiving on top of all of your expenses? And so how much profit are you receiving? And then also, like we said before, the appreciation of the asset. So how much does the house actually grow in value? And so one of the things I see that people mess up here is that they look just at the numbers, like the dollar amounts. And so they're like, oh, I'm making an extra $300 a month. Oh, I'm good. This is great. But, you want to look at return on investment and a percentage And so it's like, if you calculate the numbers and you see, I'm only making 1% return on my investment or 2% return on my investment, and the market is up 10%, and you put in all this work, all this time, all this money and effort, is that really worth it at the end of the day?
Mm-hmm. And are you going to kick yourself if you do this and decide a year or two later that this is not the right thing for you? Because that's the other thing I see happen all the time. It's like, we really, really want to do this. Let's run the numbers. Maybe the numbers don't make, but I just got a good feeling. And like, come on, like, other people are doing it and it's working. Like, you just sound so negative, Lauren. I'm like, all right, let's do it. Like, ultimately, at the end of the day, yes, there are some people that are successfully making money off of real estate. But like I said, is it right for you? Based on what I'm hearing, client ABC, it's not sounding like it's right for you. So they purchase the property, and then we're 18 months in, and like I said, there's vacancy, and they're making $193 a month, and they're just like, this doesn't feel very good. And it's like, well, we can't turn back now, because if we turn around and sell after a year and a half of having purchased, with the exception of like this crazy market that we're in right now, you're guaranteed pretty much to lose. At the minimum, it's going to be the 6% that you're going to have as the seller, just to get the two realtors paid. So once you're in, you're in. You got to decide to kind of keep your feet in the water to, be able to realize any return.
Yeah, and I would say too, for some of the people that say that they're making so much money, see if they're willing to open up the books and show you, are they really making as much money as they say they're making? And
Ooh,
is
what
this
she
profitable?
said, y'all. What she said.
But yeah, I mean, it's, some people say they're making a lot, but then you look under the hood and it's not what it seems. And so that kind of leads to the next section. Because I recently, listened to someone that was talking about rental properties and owning multiple properties, and they were doing such a great job. And then I asked about all of these other considerations, and it was crickets. So we want to talk about some of these other considerations, in addition to what we just talked about. The first one is liability protection. You have to think about when you own these properties, there's a lot of liability associated with it. If something happens to the tenant, if the tenant, invites people over and has that party and somebody slips and falls, gets hurt, gets drunk, like goes and kills somebody in a car accident. I mean, all kinds of crazy things can happen. And some of that stuff can fall back on you. And so how are you owning this? Do you have an LLC set up? Do you, just how do you own it? In addition to that, the right bank accounts, like Lauren said, do you have everything, even if you have an LLC set up, do you have everything going in your personal bank account? That basically cancels out the LLC and the liability protection. So, so I mean, you have to manage these things like a business, and you have to make sure that you have that, that structure and ownership set up the way that it needs to be set up so that your personal assets are protected.
Yeah. And another point on that LLC part of things is, yes, it does, in fact, limit your liability, but it's also a lot harder to get a property that has a mortgage on it into an LLC. It's not impossible, which is why it's important to work with a legal person, because, like I said, you want to go to LLC.com and you think you're just going to get it all taken care of. And especially it's harder when you put very little down on the house. So there's going to be a lot more fine print as it relates to what your mortgage says is not letting you put it in the LLC, or, maybe making your full mortgage come due if you try to move it over. So you got to be thinking about those things as well. And thinking about the LLC before you purchase the property. Like I said, it's not impossible once you own a property to get it into an LLC, but you definitely want to take those things into consideration.
Yeah, and if you have multiple properties, I mean, does it make sense to set up an LLC for each property versus putting them all in a single property? Because if there's something that happens with one of the properties, they could take all the assets associated with other properties that are in that same LLC. So, talk to an attorney, understand what you're getting yourself into, and the proper legal structure that makes sense for you.
Amen. Amen. The other thing, as we talk about liabilities, like you said, what do they come up against if they do have some sort of claim? Your insurance. So, what kind of insurance do you need? Are you properly covered from an insurance perspective? Another thing that you should be making sure that you've got covered so that something can jump into place should somebody need to make a claim against you.
Yeah, and there's a difference between a traditional homeowner's policy that you own for your primary residence, and then there's what's called a landlord policy, and so you need to make sure that you have the right type of insurance. And we did an episode about property and casualty insurance a few times back, so take a listen to that and make sure you have the right type of insurance for your rental property. And then another thing that often gets missed is renter's insurance for the renter. You should require that your renters have renter's insurance. Some people say it's optional. They don't check on it. They don't think it's a big deal, but you need to be covered, and you need to make sure that your renter is covered.
Yes, yes, and yes. Like you said, so often you're like, well, I don't care about their stuff. It'll be all right. Like, you do not want that to turn around and be a claim that they're making against you. Once again, like I said, there are various situations where that could end up with you having some sort of liability. And it's better to make them spend the $12. Like I said, if they're not going to be responsible for themselves financially, that you require them to be responsible. And then they'll maybe thank you later for making them get that renter's insurance. So,
yeah. Yeah. And then, we mentioned this before, but just bookkeeping and taxes. Is this something that you're going to do yourself? Will you hire someone to help you? You just want to make sure that you're not getting yourself into trouble by not reporting things properly on your tax return. by, just not keeping up with your bookkeeping like you should. So, to kind of understand what you need to do there and make sure that you get professional help.
For sure.
And
then
finally,
last but not least, I would say is estate planning. So what will happen if you kick the bucket to these properties? What will happen if you become incapacitated? We talk about this all the time with clients. So, oh, I'm young, I'm single, I don't need any estate planning documents, I don't have a lot to pass down. Well, if you are a property owner, you have something. And even if it comes with a mortgage, and like you said, if you were to become sick or incapacitated, you're in a car accident and you're alive, you're going to make a recovery. But in the short term, maybe for the first 2 weeks, you're in a coma. And then you wake up, now you got 2 months in the hospital because you got physical therapy. It's not a fun thing to think about, but at the same time, somebody needs to be managing your affairs during that time period. And with your affairs, that comes that property. So those are things to be thinking about as well.
Yeah. And then just, how will you pass these properties to your heirs when you die? And next week we're talking to an attorney, so we'll get more into this. But one thing I will say, as far as rental properties, I've seen kind of the different spectrums of people passing away and passing on assets to future generations. And it is so much easier when a client has a $10 million investment portfolio and they have 3 kids, and we just say, 3 million to you, 3 million to you, 3 million to you. And they just ride away in the sunset versus having all of these houses, whether it's, primary home, vacation homes, rental homes, and having to split that up between the kids. Some of the kids want it. Some kids might not want it. They want to sell. There might not be enough assets to help take care of those properties. Mm-hmm. And so it can get real messy real quick. And if you don't have an estate plan, if you don't have those documents drafted, it's up to the state that you live in to determine what happens to those properties. And
imagine what it would feel like to experience the death of someone that you truly care about, be in the midst of grieving and then be constantly on the phone with lawyers and, various personnel trying to figure this out. To be, going back and forth with a sibling. So if you're a parent that has these properties and you're talking about passing these down to children and, this being something that you want to create part of your, generational wealth or part of your legacy, what kind of burden would you be creating for them in that moment if you don't have proper documentation in place? And then what's the risk that it doesn't even end up where you want it to end up if you don't have proper documentation in place? So there's the estranged child or estranged spouse that comes back into the picture and stakes their claim. If you don't have documents in place, maybe somebody gets a piece of something that you would have never wanted to be a part of it, or forces the sale of the property to get their piece of it, and everybody else that you cared about. And, mama said that we should live in this house and all be together or something. And now here comes Uncle Bob down the road or something that says, I don't want it. Just give me my share. And everybody now has to sell and take their piece. So those are the kind of things. Now we're like, oh, who's going to buy it? Who's going to buy out Uncle Bob's share? It gets real complicated real quick. So you definitely want to take some time to think about worst case scenario and then get the documents in place for worst case scenario. Definitely.
Just to wrap up, we wanted to just give you some food for thought. We don't necessarily, we're not against real estate investing, but we just want to make sure that you go into it, just like with a primary residence, you go into it understanding what you're getting yourself into. You understand, why you're doing it. And if you're ready for that commitment as far as your money and your time, and do the numbers work. Does it actually make sense?
Yes, and yes. Like I said, I feel like sometimes we get the Grim Reaper kind of connotation behind us, but it truly is about knowing better so that you can do better. Because there are plenty of marketing things out there that are making various money topics seem super duper sexy. And when you turn off the lights, it is not the sexiest thing, and you're like, oh my goodness, what happened here? This is not the sexy thing I thought I was getting involved with. So
and I'll say too, I mean, there are a lot of people on social media and just kind of touting like investment advice, or invest, like whether it's investing in the market, investing in real estate, or even sort of what we'll call alternative investments. But, a lot of times these people are selling courses and they're not licensed and they're selling courses. And, they're probably making more money selling these courses than they are making money doing the thing they're trying to teach you how to do.
Ooh, she just said a word. It is so, so true. And I think that goes back to, just to drive home that last point, a point that you made a little bit earlier, was this idea that ask for the numbers, ask for a little bit of transparency. How are you doing this? Even if your friends are doing it. This podcast is all about getting people more comfortable talking about money. There's people you care about. They're like, oh, you should get to a rental property. Well, girl, you have one? Tell me how it works. Tell me how much you're making. How are you covering if you get a roof leak? Take the things that you thought about or maybe even learned about from this podcast and ask those questions of the people around you so that you can really get an under idea. Like, how much are you clearing after it's all said and done? And is there an emergency fund for this property and you still have money left over? Because that's the stuff that we really got to get into. Like I said, we can make it look sexy, but we got to really peel back the layers and understand, what we're getting.
Definitely.
All right. To wrap it up, we've got our money quote. We always have one at the end. Today's money quote is: real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. See, I told you guys we were not naysayers. That's a wonderful quote, I think.
Yeah. And that's by Franklin D. Roosevelt, FDR. And so the thing is, though, of course, real estate is, it is something that it's good to have. It's good as part of your portfolio. It's good to have a home to live in. But the key of this is purchased with common sense, paid for in full, and managed with reasonable care.
Ooh, purchased with common sense, paid for in full, and managed with reasonable care. Mm-hmm. Go ahead, girl.
But yeah, just, it goes back to the whole thing. Like we're not anti-real estate, or, we're not anti-home ownership, but we just want to make sure that you're making informed decisions, that you're getting into something, knowing what you're getting yourself into, knowing that you're making a good, solid financial decision, and that you understand how this affects you personally.
And with that, we are ready to wrap. Chloe, what do we have next week again?
Yeah. So like I said, next week, we're going to talk estate planning and wealth transfers. We have an attorney who's coming on to speak with us. So we're excited about this episode. We see a lot of, we want to make sure that you understand all the different terms. People talk about wills and trusts, and there's so many different types of trusts and powers of attorney and advance directives. And so we want to make sure that you understand all of those terms, but also, just talk through some of the mistakes and things that we see as well.
Mm-hmm. And Shalini Kodaspati is the estate planner that we're having on. So I can't wait for you all to meet her. She is so interesting. A fellow Trinidadian, or Trinamarian, I should say. She's actually born in Trinidad. I was not. But now running her own estate planning firm here in Texas. So not only will she be able to speak estate planning, but there are a few states, I think there are 9 of them total in America, that are what we call community property states that handle things slightly different than others. So we'll be digging into that as well. So don't miss that episode.
All right. Well, until next time.